Go ahead and press that record. Okay, awesome. So we are recording. I'm going to go ahead and share my screen real quick. We appreciate you guys hopping on. Let's go ahead. All right, can you guys see my screen?
Nice snow.
Yes, sir.
If you guys can't see my screen, make sure you swipe to the left or right and you'll be able to see it. All right, so what I want to do is first thing first, I want to go on GBP AUD because it's the pair that I was looking at in the first place with Josh. So we're going to go ahead and mark this up. Guys, when I'm marking up charts, I'm looking for something simple, right? A way for not only for me to understand it, but when I mark up a chart, somebody else is going to look at it that may be brand new to trading and know exactly what I'm looking at, right? Maybe not everything, but they got a pretty good understanding and making it pretty self-explanatory, right? So what we're going to do, I always start in the line chart. The reason I start on lines versus candlesticks, which obviously you can switch up here. The reason why I start on a line chart is pretty simple. A lot of people always have a question and concern of, okay, where do I put my support and resistance? Do I put it at the wick, right? Do I put it at the top of the candlestick? What do I do, right? Well, if you delete this and you go to the line chart, this is what you're going to be able to do, right? Watch how simple this makes your trading, okay? So we're going to go ahead and we're going to just look at the points in the market. And I always start on the 4 hour, gives me a good understanding of where the market's pretty much going, okay? So you're just going to simply hit the points that are all touching, right? So you got a point here, got points here, right? Pretty self-explanatory. We're going to go ahead, go down to here. We got points here touching. And there are going to be more than just one. Obviously, you got a couple right here and stuff like that. But I just mark the ones that are pretty clean and obvious, right? So we're going to go ahead and put one there. I might actually have one right here. Okay, so you got one there. Got one there. And for good measure, we'll go ahead and put the last one down there. All right, so now watch exactly what happens, guys. You go from this to candles, and now that concern that you had is what, right? That concern is gone. Why is that? Well, when you're looking at a line chart, you don't got to worry about and ask yourself, do I put the support resistance line at the candlestick? Do I put it at the end of the wick, whatever it may be, right? It's all done for you, and it takes the confusion away if you simply start on the line chart. Okay, that is the point of the line chart. So that way you don't have to really worry about that concern. And instead of just simply sitting there and wondering, not knowing how to mark up a chart, second guessing yourself, you're already marking up the chart and you're ready to go, right? As you can see the support resistance areas are pretty clean. We'll go ahead and circle some of them just so that way you can see the areas where the market touched. Boom, you got areas right here. Got another area here. Here. And here, right? So you can see that that support is pretty heavy. Why? Because you got all these areas in the market where it's bouncing off, right? Market was simply rejecting this area several times. Down here, obviously, it was a what? It was a ceiling or resistance. But then when it came back down, it tested as a support. Why? Because it broke here, but then it broke right back above, and it hasn't been able to break it since, right? Even days and weeks went by, came over here, couldn't break, came over here, couldn't break again, right? So we clearly have those areas. What I'm going to do is I'm actually going to go ahead and delete this just for a sec. We're going to go back to the line chart. I want to show you guys something real quick. Okay, so we're just going to mark up just a few of these real quick. Oh, we don't have crazy amount of lines. Okay, go back to candles. All right.
Let's see here.
So what I
Okay,
want to do, guys, when I look in a market, right, I'm going to look for what's called consolidation, right? So what that simply is, to keep it pretty simple, is you're going to be looking for an area in the market where the market continued going up or continued going down, and then what did it do? It started moving sideways, right? So technically this right here is some consolidation, but I want to look for the obvious ones, right? So I want to look in the market where we're going to be able to get in and see clear we're going to make it white. We want to see clear consolidation, right? So technically we got areas right here, right? Yes, it broke above, it retested. This one you actually would have broke even if you got in, because my entry would have been here. You would have been up probably about, it actually went up, this is a 4 hour. So technically, this actually would have went up about 60 pips and then came back. But this is what I like to do for the best case scenario, right? To just keep it super, super simple. Your 4 hour, you're obviously going to mark up some key zones if you want. What I do is I go right to the 1 hour though, and that's where I find my consolidation the most, okay? So this right here is clear consolidation, okay? All right here, all, what did it do? It just kept moving sideways, right? You had this big push down. You had this big push down, and then it just kept moving sideways, right? So what do you do in this area when it was moving sideways though? Well, to answer your question, you don't do anything, right? So yes, you had to be very, very patient with this. Yes, you can trade inside the consolidation if you want to go up, down, right? But for me, the reason I don't do that is because I want to have more of a guarantee when I get into trade, right? So what I mean by that is pretty simple. You just simply wait for the market to break below and close, or you wait for the market to break above and close. This I do not count as a break, right? Why? Because what it did is it only closed, I think it was like maybe like five pips, 8 pips, right? I want to see a bigger drop than that. And as we saw, the next candle, when we were waiting on a confirmation, the next candle, instead of retesting, what did it do? It closed back inside of our zone, right? So what I did is I just waited patiently. It couldn't break this support, right? That's why I always do mark up like a support and a resistance as well, because it couldn't break this area, right? Even though it broke out of consolidation a little bit, it could not break this support. It kept wicking, kept going sideways, right? So what do we do? Well, we simply waited. We were patient. And where is my arrows? Okay, what did we see over here?
Sideways. Right here. Sideways.
Okay, so we did get a bunch of wicks. It did close back in here, so we wouldn't have got in right away. We were waiting on this engulfing candle right here. Okay, so this engulfing candle, I would have just honestly called a buy right away. Usually with an engulfing, you don't necessarily see that retest that you want to see, right? So instead of waiting till it came back down, we would have market execution this trade, and you would have been in, and you just go right to that next resistance area, right? This is an area where it couldn't break. It broke above. What did it do? Came right back down below this, right? So it was struggling to break this area, as you guys can see. So what we did is we simply had our take profit right at about 75 pips. I typically take profit at about 50 if you want to compound your account, okay? But I do like to make sure that my risk to reward is 2 to 1, right? At least 2 to 1, because I'm not going to get in a trade if I'm risking 30 pips and I'm only going for 20 or 30 pips. Doesn't make sense to me, right? That's why I like breakout consolidation trading. So what you would do is, let's say your entry is right here, right? We got in your market execution. We'll go ahead and label it so that way you guys see that. We'll do another example as well, several examples actually, so that way you guys can see that too. Okay, so your entry would have been here. You got your breakout. We all know that this is the breakout, but we can go ahead and label that too if you'd like. Okay, so you got your breakout and your close above on the 1 hour. You got your entry point. Now, what are we going to do? We're going to look for our stop loss and our take profit. I always recommend now, before you get in, especially during elections, right? We don't know what's going to happen in the market. So what you want to do is you want to make sure that before you enter a trade, you want to, does anyone know who Rylan is? Rylan WB?
Yeah, he's my number 3 leg.
Okay, cool. Just making sure. Okay, awesome. So what we're going to do though is we're going to go ahead and look for a stop loss and a take profit. Okay, so we already said our take profit's going to be up here. We'll label that here in a sec. But I want to make sure that we get our stop losses set. So technically, I would have set my stop loss right back at this area right here. Whoops. The reason I always set it here is I want to make sure it's going to be below this zone, right? What you could have actually done, because this is a high risk, right? This is quite a big stop loss. So in order to make sure that you tighten that and you're good to go, what I would have done, you got an engulfing candle here. If you don't have a retest for an entry, what I would have done is I just would have put my stop loss right below that engulfing a little bit, because I don't want to see it come back in this area, right? If it comes back and it engulfs this engulfing, you're not going to want to be in that trade. It's going to drop, right? It's at least going to drop down here, if not break below. Okay, so your entry was right here. It's about a 40 pip, about 35, 40 pip stop loss. Okay, and you got about 75 to 100 pip take profit, right? I would have taken profit, like I said, probably at 50 just to be safe. But honestly, in one candle, this went 75 pips, you would have already been out, right? You wouldn't have to worry about take profit or anything else, because it would have already hit it in 1 hour. It doesn't always do that, but with an engulfing candle, that's typically what you'll see, right? So we went ahead and we put this as our stop loss. So we'll go ahead and label that. Profit pips. And the reason I put it up here, guys, is you can see that this is clearly an area where the market was rejecting, right? Clearly an area where the market kept rejecting. Okay, so if it kept rejecting at that area, there's no guarantee that it's going to break that, right? If there's no guarantee that it's going to break, this would have been your guarantee that it wasn't going to break, right? This candle right here, as soon as it came up here and it closed below, I would have been out. But to confirm that you need to get out would have been this engulfing back to the downside, which you would have lost 30 pips of your 75, right? You still would have made money. But if I see this red candle close below, right after it just closed below the support already, I would have been out. Yes, it came back up and it retested it again. But as you can see, it just kept coming back, right? Even up here when it engulfed, a lot of people would have got in. But the reason I wouldn't have got in this is simple, right? Because of the fact that there was no other, there's nothing else to confirm that you should have been in this, right? And if there's no other confirmation other than one engulfing candle, yes, you got some consolidation here, right? But you got to remember, mark up your resistance and your support. I marked up another resistance. What did it do? It closed right below that. So you've got to wait anyways, because you got to wait to see if it's going to break above this. And then what did it do? It engulfed the same exact size candle right down, saying that the sell was, saying that this resistance right here was not done, right? So it came right back down below, boom, came right back down below, boom, right? It could not break that area. So let's go ahead and look for some more consolidation real quick. Technically got another one right here. And guys, you just want to look for, you want to look to have at least 5 candles in the consolidation area. I like to see a big drop or a big rise before the consolidation, because that way you know that it's either going to continue on the breakout and you're going to trade with the trend, or if you got to trade against the trend, at least you're going to be confirmed that you're good to go, right? So here's your consolidation area, right? You already had the drop. So you already had this drop here. You would have confirmed that it's obviously a downtrend if you had a trend line here as well, right? It broke that area, kept retesting, boom, it dropped. But what did it do afterwards? Well, it consolidated. So this is where you're going to start to see, is it going to continue in the downtrend, or is it going to come right back up to the uptrend? Well, what we did is we simply waited for the break, right? So let's go ahead and delete this line real quick. We waited for that break. So we got our consolidation. We got our breakout candle. This one wasn't engulfing. So the good part about it not being engulfing is that you can typically get your retest. Okay. So you got your break right here. You got your break. Now you're going to wait on catching that retest. Okay. So what I typically do, you can go to the 15-minute if you want, and you can sell it when it comes back up, or you can do what I do. As soon as I broke this area, I'm just going to simply either 1, market execution, or 2, I'm going to do what I typically do, and I put a buy limit, or I put a sell limit, right? So I want it to come right back up to this area, test this same candle, if not this line, and then drop, right? So you got that retest right here on this next candle. And as soon as you got in, you had 0 drawdown. I mean, it ended up technically going 156 pips, right? And what you would have done is you would have just looked for your next area of support, right? Let's double check that's an area of support. Okay, you got an area over here where it acted as resistance. Okay, it's actually not been at this area for quite some time, but you can see that it was support over here, it was support here, it was resistance here, and support here. So yes, that's a key area, right? So that's where we're going to look for our take profit. Now, if you had another trade in, obviously it went past this. If it goes past your take profit, guys, it's a good thing. It's not a bad thing. Yes, you missed out on some pips, but guess what? It's not about how much money you make in the markets. It's about how much money you don't lose, right? So I heard that quote today from a very good friend of mine that's teaching trading as well. And when he said that, that pointed right out to me, right? Why? Because I'm always so focused sometimes on how much money I'm making and want to get rich quick, right? We all do. But truth of the matter is, it's not necessarily about how much money you're making right away, but of how much money you're not going to lose in the markets, right? And that's where your strategy comes in play. You got to find out what you're good at, right? If you're good at support resistance, follow support resistance, 1 trend line, look for 1 more confirmation, whether that be an indicator, whatever it may be. We don't rely on indicators, but it could be your confirmation to either get in the trade or get out, right? And once you've got your confirmations and you follow your steps, boom, it's time to get in that trade, right? But what you want to do is you want to make sure that you set your stop loss, you set your take profit, And whatever your entry is, whether it's a sell limit, buy limit, or market execution, once everything is set, forget it, right? Let that trade do its thing. I like to get in around 9 p.m. That is my bread and butter for my breakouts. Why? 5 to 9, you're going to get that area where that's your consolidation. Sometimes we've seen it to where I call it a trade, and we're in consolidation from 1 p.m. all the way to 9 p.m. and then we finally get our break, right? I hate that, but sometimes that's the way it happens, right? But typically 9 p.m. to 12 is when you're going to get that break. I like to see the break before London because if we can hit our take profit before that 3 a.m. candle, that's beautiful, right? Because that 3 a.m. candle could either really reverse your trade or really put it into profit. I used to be a bread and butter like London trader massively, right? But the one thing that sucks about London is the fact that you always got to stay up super, super late, right? So sometimes if you're not a night owl, like myself, your eyes get really tired. You're not looking at the market the same way, right? And next thing you know, you fall asleep with no stop loss in, right? I'm sure we've all been there. If you haven't, it's going to happen once in a while, right? It sucks.
Yep. Last night, man.
It sucks, but it's going to happen, right? It's reality. It's part of trading. It's part of lessons, not losses, right? If you can trade, you can teach yourself to take a lesson versus a loss, you're going to make a lot of progress in trading, right? And then the other thing you got to make sure of, you got to make sure you're giving yourself at least a minimum of an hour to 3 hours a day trading, right? Not trading live, not necessarily trading demo, but I'm talking about studying the markets, back testing the markets, right? Practicing your strategy, mark up charts, send them to somebody, right? So that way people can understand exactly what you're looking at and tell you, hey, this is what you did wrong, this is what you can do better, right? Or this is what you did right, congratulations, right? Now you're ready to go in the markets. That's what we're here to do, right? We're here to make sure that you guys get a good understanding because we want to become full-time independent traders. That's this skill set that you can literally teach your kids, right? One of my best friends, his 12-year-old son literally dominates these markets. He's 12 and all he does is follow support, resistance, and trend line. That's it, right? Nothing complicated. For this is pretty much what I do as well, is support, resistance, trend line, but I like to trade out that consolidation area for my one other confirmation, because when I'm getting out of this consolidation, I'm at least getting 50 pips from these consolidations, right? It's going to break below, it's going to give you your better entry point. And that's why I really like consolidation too, is if it breaks below and you put a sell limit, right? You just simply put your stop loss above, and now you got a small risk for your trade, but you got a hell of a take profit, right? You got a great take profit. So your stop loss on this trade, once you were in, you're looking at about, actually I'd probably put a little lower because I don't go more than 40, right?
It's wrapped in saran.
So you're going to typically, with a GBP pair, you really don't want 30 pips. It's usually going to be between 40 and 50. You got to give it room. It's GBP, right? But the cool part is giving it more room. You also have a bigger take profit, right? You're not going to get none of these 5 pip trades, right? That other people are doing in scalping. You're seeing them, oh, I made profit, but they only caught actually like 5 pips. And other people are like, how did I lose if you won? Well, it's because they just simply took profit early, right? There's nothing wrong with that because you're compounding your account, but you got to realize that if you are going for your take profit, if it's a GBP pair, you're going to have to give yourself a little bit of room, but you still want that 2-to-1 ratio, right? So if your take profit's down here at this green line, you still gave yourself your 2-to-1. Why? Because you're risking 40 pips for 97, right? And it actually blew through that. Make sure you guys account for the spreads, right? So look at whatever your broker spread is for that pair. If it's like 5 pips, put your trade 5 pips above that person's take profit, right? In case that, because you got to remember the wick and both the spread and the actual entry point have to pass past like whatever your take profit is. They both have to go past it. Otherwise, you'll get that wick where you're like, how did the wick go in my take profit or go in my stop loss and get me out, but yet I didn't win, right? So you got to simply account for that spread just to be safe. It's only 5 pips. You're not going to make too much, right? Unless you're on heavy lot sizes. In that case, it don't matter anyways, because you still made like $500 to $1,000, whatever it is, right? Guys, I just watched my best friend literally make $10,000 in 2 hours today on AUD USD. 2 hours. All he did was literally catch 25 pips and he got out. And now he's back in using the money that he already made, right? Not all of it. So that way he still secured the bag, but he made $10,000 in 2 hours. That's what happens when you compound your account and you make sure you're practicing your strategy each and every day.
Yeah.
Right?
Love that.
So this is the reason why I really like consolidation trading, is because it's really easy to find in the market. The reason it's easy is because consolidation is always going to happen no matter what. Either you're going to get consolidation between 5 and 9. You may get consolidation where this part, it was literally for almost 24 hours. This is an hour candle a piece, right? You may get that. But the cool part is you don't got to worry about your trade when it breaks below or breaks above, right? Why? Because you set your stop loss, you set your take profit, you set it, forget it. Yes, it could reverse, right? But chances are you got a really good risk to reward trade. And now you're looking at yourself and you're a lot more confident because you know that, hey, doing this strategy, you could do what I did. We went 12 for 13, right? And it wasn't just like 30 pips here, 30 pips there. Guys, it was like 60 to 100 pip trades, sometimes even more if we kept it going, right? And depending on if you twin traded it or not, which simply means you open 2 lots on the same pair, right? If you open 2 entry points on the same pair, then if you secure both of them, you're looking at double the amount of pips, right? But you also got to look at the fact that you are risking double. So you just got to see what you're comfortable with. Once you're comfortable with it, which is why we go on demo for so long, don't be afraid to be on demo for 6 months, right? If you're that one person that's not worried about spending money right now, when it comes to like your membership, or you just get 3 people and you're good, right? Make sure that you are focused on trading too, right? Because guess what? When you're becoming 12 for 13, that one loss that you took does not matter. It does not matter at all, right? Why? Because our risk to reward is really nice. And if, let's say you lost 40 pips on this trade, right? Well, if you won over 40 pips in one trade, you're already in profit. And then your other 11 trades, guys, you're tripling your account in 1 week, right? Sometimes even a day, depending on how many trades you take. For myself, I take usually 4 or 5 trades a week, depending on where it's at, right? Right now, we're not giving out a lot of trades just because of the fact that it's elections and November, December is your time to practice, right? Utilize this time to practice, because I'm telling you right now, come mid-January, when the markets are back and going, I'm telling you right now that if you are ready, you will make 6 figures next year in trading by itself. I guarantee it. As long as you can stay consistent and committed, I guarantee you make 6 figures next year. Why? Well, you're trading in the months that the market is actually really moving, right? You're not having to worry about elections. You're not having to worry about all the other stuff. Give me 1 sec, guys. I'm gonna mute somebody on.
Yeah, mute Marilyn. Good job.
Okay. But that seemed pretty self-explanatory to you guys, right? Put a 1 in the chat if that's pretty self-explanatory of, okay, I just need to find my strategy, perfect my strategy, and trust my trade, right? If you guys can do that, I'm telling you right now, you too are going to get where you're like 11 out of 12, right? I always tell people in the markets, and I was told this by a very good friend of mine when I first started trading, is the fact that they looked at me and they said, Greg, listen, if you can just stay committed and consistent to the market, your losses are going to turn into lessons, and you're going to eventually compound your account to where those $1,000 checks that you're seeing for a month at your job are going to turn into $1,000 in the markets within hours, sometimes even minutes. Yes, it's going to take time, but you give yourself 8 years at a college to go get a degree to be a doctor, right? To not be guaranteed to get a job and be in a hell of a lot of debt. Why are you not giving yourself that same amount of time to practice a skill set that nobody can take from you? The banks are already using every single day. They're using your personal money. You might as well learn how to get it back, right? You're not going to be in any debt. And another thing is that's extremely important. You can literally take this strategy and you can pass it down with a skill set. You pass a skill set down generation to generation. Guess what? Your kids can learn this skill set and they have a way to pay for college. How crazy is that? I know so many people that went to college and Forex paid for their whole college.
There's a
Imagine not
16-year-old.
any debt like that. That's insane, right? But you got to figure out what you're best at because everyone's going to have their own strategy. I'm not saying consolidation is going to be for you, but what I am saying is consolidation is something that everybody can do. Everybody can understand it, right? Yes, you may miss this big trade, yada, yada. Guys, you don't need a ton of pips, right, to make a lot of money. You just got to make sure that when you get in, if this is going to tighten my stop loss, it's all mindset, right? It's literally 90% mindset, 10% skill. I can teach you how to trade within an hour, right? But now it's up to you to, are you in that mindset of, I need to go get rich, I need to pay all my bills, Forex is going to do this. Guys, you got to remember, first off, Forex is going to take time to withdraw your payments anyways. So you're not going to be able to just withdraw just to pay your bills, right? Real quick within a week. If you got bills on Friday, you can't just get your money out Thursday night and pay your bills. It's not a get rich quick, right? It can be, but you got to take time to learn it, right? If you take time to learn it, then it can become the get rich quick, right? But you still got to play it smart. So your stop loss, okay, your take profit would have been down here. Would have been, let's just say 100 pips because it was like 97. We'll just round up, right? You got your entry point. Entry on the break and the retest. Okay, got your stop loss. Now let's break this down, right? Let's break down what we would have done. So stop loss was 40 pips. And if you guys don't know what a pip is, I'm not going to explain that right now, just because you guys have like all the education, right? If you need that, we'll go ahead and explain that in another call. But you should definitely know what a pip is by now, right? I mean, shame on you if you don't. I totally understand if obviously you're not active or anything else. That's understandable why you don't know. But you've got to be teaching yourself this, right? You've got to be on YouTube. You've got to be on learning from other traders. Whatever you got to do, you got to do it, right? Treat it like a business is going to pay you like one, right? But I'm going to tell you right now, if this was a job, some of you guys would be fired for the amount of work you don't put in. Like some of you would be fired on the dot, right? Right on that spot, you would be fired because you just don't treat it like a business, right? You treat it like a hobby, and that's the reason why it's paying you like a hobby, right? So take it serious, guys. I promise you, in the end, you're going to make a heck of a lot of money. So 40 pips, stop loss, let's just say 0.01, right? Whoops. You're going to be looking at $4 for your risk, 0.10. You're going to be looking at 40 bucks. $400. Okay. So this is your stop loss. We're going to put this right up here. Okay. Now let's put your take profit down here. See those zeros getting added, guys? Oh, it's only a matter of time if you take it serious, right? Absolutely crazy with the fact that you can literally risk $4 to make 10 bucks, right? So again, that's 2 to 1. You can risk 40 bucks to make 100, or it can be risking, if you got a bigger account, it could be only risking 400 bucks for 1,000, right? And guys, it can be even more than that, right? But one thing you got to really realize is that you just got to look back at, okay, what does my risk management have to be if I have a smaller account? What does my risk management still have to be if I have a bigger account, right? Because you can just get to 10,000 in your account and then blow it all because you still don't use risk management, right? Or you don't even necessarily know what it is. Guys, I didn't know what it was when I made my first $500 in trading on gold. My first trade I ever took 3.5 years ago, right? Made $500 in 1 hour. And I said, holy hell, I can do that again. Guys, I was literally working in fast food at the time. So you know me, I'm like $500. Damn, I don't even make that literally in like 2 checks at the time, right? Because I was young. So when I was super young and I was making below minimum wage, $500 to me, I was like, ooh, baby, right? I'm excited. Let me do it again. Guys, within 24 hours, I lost all that 500 bucks, right? And whatever else was in my account at the time. Why? Because I didn't know what risk management was, right? I didn't even know technically how to trade. I just took somebody's trade. That's the thing that people fall victim to, right? You take trades from all these traders and you don't take the time to really learn how to trade yourself, right? There's 2 problems with that. One, you're relying on somebody else that could be dead tomorrow. We don't know what tomorrow, like tomorrow's never guaranteed for anyone. They could be gone tomorrow. And then you're like, well, I was relying on their trades. Like, what do I do now? Right? You don't know how to trade. 2, you trade their stuff. You get your account compounded. You start trading on your own and you lose your very first trade. And you're like, well, why would I trade my own if I'm going to lose when I'm winning all the other ones? Right? That was the same mindset that I had at the time. Right? I lost my very first trade. I didn't know how to handle it because I had never taken one of my trades, and the first one I took, I lost. Like that's insane, right? That's crazy. So you've got to really realize and take the time, take it serious that, okay, let me go ahead and really take this serious on how I'm going to learn how to trade on my own and become a full-time independent trader. Guys, the best part about trading, it works around anyone's schedule. The best part about trading, if someone comes to me and they say, I don't got time, I say BS, because trading is 24 hours a day, 5 days a week, and it can work around anyone's schedule. Guys, and I realized I could literally get in the same trade, the same analysis at around 9 p.m. by backtesting the markets every single day. At around 9 p.m., I could get in every single time. Guess what that means? I don't got to mark up any charts until 8 o'clock. I come back to the market at 9. I'm out of the market by 10, typically. That took less than like 2 hours of my time. And I only trade Monday going into Tuesday, well, Monday night, Tuesday night, Wednesday night, and maybe Thursday, if that. Right? If I got my 3 trades and I made great profit, beautiful. I'm done for the week. There's no reason for me to go in on a Friday when the market's going to close soon at 5 p.m. if I already won all the other trades the rest of the week, right? And even if I lost, you want to take the rest of the week off, come back with a fresh mindset, because remember, it's mindset, come back next week and dominate the market. Make sense? Awesome. So what we're going to do is I'm going to mark up one more, and then I'm going to go ahead and answer any questions for you guys. So that way we can go ahead and really get the ball rolling. And we'll start to do more of these as well. I mean, I can show you guys, like, just because this is my strategy doesn't mean it's going to be the only thing we teach on. I do want to focus, obviously, really hard on support resistance. That is something that everybody needs to know, right? Everybody should have a good understanding of it. So that way you can go into the market and you pretty much just look at it and see. I mean, I can see right now that this is probably a buy, but let me go ahead and mark it up to double check, right? That's when you really got confidence in the market. I remember speaking with Josh and I literally showed him, I was like, bro, I mean, I think this is gonna buy. Like, I mean, let me go ahead and mark it up, but this trade's gonna buy, right? And he was like, well, how do you know? And I said, well, I mean, just looking at like the support and resistance that I can see without even marking anything up, I can literally see that this is obviously on an uptrend, right? We're getting close to the next resistance, but it could break this area. We're just looking to see if it breaks it, right? Because you got all these wicks over here. So if it breaks it, we're going to be looking at this continuing to the upside where it's going to come up here, right? So once you gain that confidence, guys, I mean, it is pretty much a wrap after that, right? So we're going to go ahead and delete that. Let's go ahead and do we can do a smaller one. Let's do a smaller one. It doesn't have to always be like 10 candles. I don't like this one. And if it doesn't look good to you guys, don't trade it. Like, simple as that. I mean, if it doesn't look like something you should get into, don't trade it. Pretty self-explanatory after that, right? And that's how you get comfortable, really, really comfortable in these markets.
Greg, do you always use the 4-hour chart?
I use the 4-hour for support resistance, like the key levels, and then I'll go to the 1 hour for my consolidation. 1 hour for
Okay.
consolidation. If you want to go to the 15, that's where I would get your entry. But I don't even honestly look at the chart. After it breaks, I'm putting my sell limit or my buy limit. And if it hits, it hits. If it doesn't, it doesn't. Like, I could care less if I miss a trade because I didn't lose, right? But if I get in a trade because it hit my buy limit or sell limit, I already know where my stop loss has got to be. I got a very low risk and I've got a very high reward, right? And this is actually a really good example of it. I think this is actually the same exact one we just marked up. I didn't realize it.
Can you look at GBP AUD and mark that one?
Yeah, this is it.
Okay.
You want me to mark it where it's at right now?
JPY. I was
You
on
wanna mark it up?
JPY. Yeah.
We mark it up right now. Let's just mark it up as we would usually mark it up. How about that? So without my strategy, let's just mark up support resistance. We'll go back to our line chart, 4 hour. Okay, candles. Okay, so this is what we're looking at for the 4 hour. Let's do this real quick. I just want to look at something. Okay, so this is the break that I had seen with the on the buy. Okay, so I wanted honestly this to come down and retest, but it didn't do that because we got the engulfing. Like I said, it's not always going to come down and retest on an engulfing. But this is a very good break. It is at that resistance level. That's why I haven't technically called that trade in the group just yet. I'm in the buy myself because I do believe it's at least going to come up to here, which is another like 45 pips before it actually drops with this engulfing. But it did already have one, so it could easily start to come down to retest, right? So let's go to the 1 hour real quick. Okay, so as you guys can see, even marking it up from that 1 hour, you can see where it came down and it retested, right? Came down, retested that trend line, engulfed, went to the upside. Now it's testing what? It's testing this support. Well, newfound support, right? It's kind of just right in between support and resistance. It's just sitting on that line, right? So now that we have this, what I honestly want to see is what it already technically did. It technically came right down, retested this area, and now I want to see it come up here. Okay, so this is where I want it to go. Technically, it's doing that retest right now. Let's see what it does. It'll tell us, honestly, probably within, like if it doesn't close above, if it closes above here, I mean, I could see this easily coming back up to that area. So we'll see what it does. It's got about 6 minutes left in that candle. And then we'll see from there, basically, if this is going to continue up or if it's going to drop. I don't really like that, so we're not going to draw that one. Okay, so we'll see. It should go up there. If it goes up there, then obviously we'll probably take profit, and then we'll just wait for it to do the same exact thing again, where it's going to either break above and do this, where we see a higher high, right? Because this is a huge downtrend. And if we can see it up here, now we're looking at a brand new, what? Uptrend, right? Just because we got this small one doesn't mean we're on an uptrend yet. I mean, yeah, you're on an uptrend for the last couple hours and it broke this, but it could easily come back down and say that sell's not over yet, Greg, right? And then it just drops. So it's either going to do that or it's going to go ahead and break below the trend line, retest the trend line again, and it's going to drop down here. And you would just obviously extend that, right? So it's going to do one or the other. We'll see. Like I said, it's just a matter of like being patient. I mean, it did close above and it is doing its retest, but it didn't give me the consolidation that I usually trade. So that's why I haven't called it yet. I got to wait on the other confirmation because this isn't the way I usually trade, right? I usually trade consolidations. So I would have traded this area versus that, right? I would have traded like here, right? One of those. Then I would have traded that break, the retest, the drop, right? I don't trade the other way just because the other way could really, really reverse. And if you're 12 for 13 on a trade, like my mom always taught me, if it ain't broke, don't fix it.
Don't fix it.
Right? So if it's working, just keep doing it, right? Because it's only a matter of time before you compound that account to where you are now having like the $10,000 days and everything else. So I'm going to go ahead and open this up for any questions real quick. And then I'm going to give about 5 minutes and I'll end the recording and then we can of course continue any questions or whatever else. Any questions so far, guys? You guys can unmute as well, I believe. I didn't unmute any, or I didn't mute anyone personally. Miriam, any questions?
Oh, we're just awesome students.
No, I'm just trying to get my lines to go straight across.
Okay.
Are you having problems like with the how to use the trading view in itself, Miriam?
Me, no,
Like how to use the tools in the trading view?
I'm learning all of the tools. I've rewatched the video on how to use, what does what. It's just, I think it's more like my mouse because I'm on my computer with a really, oh, there it is, with a really screwed up mouse. So,
Okay.
But no, I'm learning it. I'm getting it.
Good, good. Yeah, we can't help you with the mouse issue. Sorry, man.
Yeah. Thank you, though. No, this is cool.
Trading view can be confusing for people just coming into there. I remember when I first started trading view, I didn't even want to open it. I'm like, what are all these things?
I know
And coming
that-
back now, 2 years later, I look at Ask Josh Corte. I'm just like, oh my gosh, I loaded the 20 pip and dip and my screen just like, I thought, no, shut it down. Oh yeah, Samita, I need your help with that in a bit later.
I know that I got a little confused because my line chart didn't look like Greg's did.
Yeah.
So it kind of.
Did you figure that out?
Yes.
Okay, good.
Yeah, I sure did.
Me, I'm spinning an arrow. Okay. Are we done, Greg?
If no one else has any questions. And as you guys can see right here, I mean, this is why we wait, right? It closed what? It closed below. The hour just closed. So we're definitely gonna wait on this. We gotta wait for it to break back above close on the 1 hour retest, and then we're gonna go ahead and get in that trade, right? Because now this could easily come back down to this area, right?
Mhm.
We just want to see. Josh, if you're in this trade, bro, because I know I did call it for you, it should push up one more time to your break even, and I'm going to go ahead and close it. And then we'll just wait for it to close above. All right, guys, so I'm going to go ahead and stop the share and end the recording.